Is the global banking sector teetering on the edge of a precipice, ready to plunge into the biggest crisis since the Great Depression? Today, we're exploring this looming threat, as experts predict that nearly 1,000 banks could find themselves in dire straits in the coming months. This grim forecast is not without basis. Recent banking industry upheavals, such as the collapses of Silicon Valley Bank and Signature Bank, the third largest bank failure in U.S. history, have set off alarm bells. The Bank Term Funding Program, or BTFP, emerged in response to a crisis last March. This program extended $161 billion in loans to 184 banks, buying troubled assets at full value to avert immediate losses and provide liquidity. But there's a catch. Those banks now must repay the full value of assets that were initially underwater, further straining their finances as economic conditions deteriorate. The broader economic situation is also a factor. Take, for example, the recent troubles with the Japanese yen, which took a nosedive only to be propped up shortly after by what seemed to be an intervention from the Bank of Japan. This illustrates the fragile state of global financial systems and interlinked economies. In the U.S., the increasing federal deficit requires the selling of trillions in Treasury securities, a precarious situation if major holders like Japan start reducing their holdings. Higher yields could make Treasury securities more attractive than the negligible returns on bank deposits, prompting a shift in where money is parked. The ripple effects of banking instability could be far-reaching. Struggling or consolidating banks could impact the real estate market, particularly commercial real estate, and lead to broader economic disruptions. Even the FDIC, traditionally a bastion against bank failures, could find itself overwhelmed by the scale of potential bank failures compared to its available funds. In this uncertain financial landscape, individuals and businesses may face tighter credit conditions. Experts recommend enhancing personal financial profiles by improving credit scores and reducing debt. Companies like GreatCreditFast.com can assist with improving credit health, potentially crucial for securing funding in tightening credit markets. In conclusion, the looming banking crisis is not a mere speculative scenario, but a potential reality that could reshape the U.S. and global economies. The interconnectedness of financial institutions, the fragility of global currencies, and the strategic responses by central banks all contribute to a narrative of significant upheaval ahead. The message for investors, businesses, and everyday citizens is to prepare, plan, and stay informed to successfully navigate the uncertain financial waters that lie ahead. And don't forget to hit like and subscribe to stay updated.